Welcome back to capitalcompetent.com. Today we're going to go another portfolio update. And this is an important one because this shows how the portfolio will go through swings. Okay? Right now, most of our capital is coming from us adding every week. Okay? So we've been steadily increasing that way. But today, or excuse me, this week, we have seen the biggest loss. So what you do is you look at it and you see where you're going wrong and you test your thesis. Okay. Also, hedge funds are loading up on shorts. And with all the hype going on, this huge rally, is there a recession incoming? There's a lot of talks, and it was all the way up at 70% at one point. Now it's at 39% odds, right? But it all matters about the consumer. Okay, so let's go over some updates. I got some new positions. Target is one. We bought more gold, more bonds, and then a huge thing for me is less SPY. I actually sold SPY to reposition myself. Okay? Also, some huge things. We are not on pace right now. We are not on pace to hit that mark by the end of the year. Does not being on track affect my view? And then at the very end, I'll go over what my odds of a recession are. Okay, let's look at the portfolio today. We hit the 3 grand mark. Very nice. Very, very, very nice. But I was expecting more of a 5 grand at this point. Now we are way off what I usually do. And you can see here, bought more gold, bought more bonds, okay? And we also added Target. Target is a play on a resilient brand that has a lot of foot traffic. People, higher income people go to Target, okay? They've got better quality products, they have a better shopping experience, right? And as we enter a recession, or if we enter a recession, Target is actually going to drop in price while Walmart goes up in price. But as soon as it swings the other way, Target has the chance to explode. Okay, so this is just a small addition, right? They just reported earnings and had the same viewpoint as all the others. The earning rates are coming down. Okay, now a huge added position is this Tesla put. Okay, and if you want to know my opinions on Tesla, I have a huge, huge in-depth video on Tesla that you can watch out and gives you my full thesis on it. So much, I'm so strong in this position, or I'm so confident in this position that I actually put it into this portfolio. Okay, but the big elephant in the room, okay, is this put right here. We are down 80%. 80%. Minus $300. That is a huge, that's the difference between $3,500 and $3,000. Right now I could sell it for 65 bucks. Do I sell that? No, I don't. I'm going to wait and see. The worst case scenario, this will go down 30 bucks. Best case scenario, we'll come back to breaking even and then make money. Because although tariffs are not as high as they once were, they are still in effect, and that affects inflation, and that affects consumer confidence, and that affects, which then will affect the economy, which then affects earnings coming down, which then affects the growth rate of the United States, which leads to recession, which leads to more selling, which leads to outflows. Okay, there's a lot of things that have to happen, but the thing is, we are on track for that. Okay, these are my points for today. I added Target. It's the lowest it has been in 5 years. And like I said, I think that shift will be big. First time I sold SPY. Now, why did I do that? It's at the lowest, remember the rules, 40 to 50% SPY, but I'm keeping it at 40% for a while and I'm only adding a little bit. because we are averaging a 25 PE while potential earnings are going down. You see companies everywhere lowering their target or lowering their guidance. So I'm keeping it at that 40%. We're following the rules. But I actually took some money out so that I could open this position. This position has potential to 8x, 5x. Okay. If you want to know, please watch my video. It's my most in-depth video. It took my longest to make on Tesla and what I think about Tesla. I think Tesla is a phenomenal company, except it's just too expensive where it is. And I actually give you how much I think Tesla's worth in that video. It's worth a watch, and it helps you think how I evaluate business. The big question, am I wrong? I don't think so. I think you can point and laugh at me right now, but I think over the long run, I will be right. We don't have a catalyst to push us higher. We simply don't. We are in a worse shape, excuse me, we are in a worse shape than we were in February. So why would we go higher? We are in a trade war that tensions are not as high, but we are still in that trade war, which leads to, will there be a recession? It depends. It all depends on the consumer. Life and economics are very simple. It's supply and demand. Okay? If we start experiencing, so we front loaded a ton of products, right? We front loaded a ton of products. But if we start seeing empty shelves as a result of this trade war, as a result of increasing costs, if supply goes down and cost goes up, demand will plummet. If the consumer holds on to more money because products are simply not there, or the price goes up out of their price point, they are either going to look for cheaper products or they are going to hold on to their money altogether. If if demand if demand goes down, spending will stall and earnings will drop. You've already seen forecasted in a lot of these companies. The only companies that have not are these big capex things because we need technology. We need to be the number one in AI to keep our dominance in the world. So capital expenditures are going to happen. But at the end of the day, earnings, right? Earnings is what drives the stock market. Why would you buy a company that makes 30 grand when another company makes 40? You would buy the company that makes 40. If that 40 becomes 30 the next year, then you're going to look for the one that's 40. But if everything's going down, then there's going to be an outflow. If there's an outflow, then that means there's a shift in buyers, which I say all the time. If buyers, the only reason prices rise is because people buy the stock. If those buyers become sellers, it plummets. When there's a disconnect between what people are paying for the price and the underlying fundamentals, aka the multiples, if the multiples are so high, that means the only reason that the price is so high is because there are a lot of buyers. And if you keep buying at these outrageous prices, the prices will go up. Buying breeds more buying. But the thing is, when you run out of money and you start needing that money back, right, because the economic conditions have changed, those buyers become sellers. And then that multiple, that balloon, is the only thing that is keeping it up. Now, I think a recession is around 75%, 80%. Now, it might not be as bad as people think, but there will be one. Okay? There will be one. What we need to see is if it's going to be a really bad one or a soft landing. Okay? The Fed is not going to lower rates, right? And especially with everything that's going on. They might not lower it this year. So this recession will happen, not today, not tomorrow, but eventually. And once again, this is not a bad thing. This is not a bad thing. Now, for our portfolio, we are recession proof. This portfolio is recession proof. I say that because these two companies These two companies are going to be resilient. They're consumer staples, they're going to be resilient. These two are extremely resilient. This is the only one that will go down, but if this one goes down, the inverse, this will go up. This portfolio is bulletproof at current conditions because we're either going to trade sideways or we're going to go down. That's my prediction. Okay? Remember, this is not advice, this is just educational purposes. And I hope that you're actually listening to what I'm saying and actually taking it all in because this is the market mechanics. Okay, it can get out of hand and it can get pushed so high, and then people can make a ton of money, and then your neighbor's making a ton of money, so you start buying, and then that just gets it. It's greed. That's all it is. But at the end of the day, there are mechanics of a market, and it's why it exists, so that you can buy companies and their earning potential. So I think we are in a great position today. And to answer, am I wrong? I don't think so. I don't think I'm wrong, but only time will tell. Okay. Uh, Watch my previous video on Tesla. It's one of my biggest videos. Watch the video of how to profit in a downturn, and I promise that education is worth the 20 minutes of me sitting down and teaching you. Promise. Thanks for watching. See you next time.